You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central. It is 1 p.m. Eastern. It is time for your bi-weekly dose of all things options related, some wit, some wisdom, some analysis, some unusual activity, a whole bunch of education, and a whole bunch of other fun stuff mixed together to get the tasty, delicious cocktail that is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. I want to thank all of you out there for downloading and streaming and subscribing, listening to all the stuff we've been putting out throughout the week. Remember, if you like what you hear, keep those reviews, keep those comments coming wherever you get our shows. Could be in the app stores, could be via all the major podcast platforms, the old YouTubes, wherever you get them. Keep those comments, those reviews coming so new folks can continue to discover the content. Of course, keep those questions coming too, particularly on Mail Block Thursday. We do love to hear from you guys. And let's see who we're hearing from on the old program today. Let's start out. Let's go out. Let's mix things up. Let's go out to the Demand Derivatives hot seat, where we are joined once again by Mr. Bob Krause, the CEO over there at Demand Derivatives. Bob, welcome back to the Option Block, sir.
Thanks so much, Mark. Hi, everybody. Yeah, I'm back again. So 3 weeks in a row now. I don't know if this is a trend or what.
It's a new record, sir. A new record. 3 weeks in a row. You got a ways to go before you match the Vol Views record, but it's a good start for the Option Block here, nonetheless. And also joining us from his palatial fortress on the shores of Maine. Remember, he conjured up some good images of it last show, which was a week ago, by the way, listeners. We were, of course, off here on the old OB for Monday for the Martin Luther King holiday here in the U.S., but we're back, so hopefully you didn't miss us too much. We had a lot of other content hitting the network to keep you engaged during that time. So let's go back out now to the shores of Maine, which in my mind, always dark, always raining, waves always crashing, lightning and thunder raining down from the heavens, where we find the GIOVINAZZI compound of one Mr. Rock Lobster himself, Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program. How you like my setup for your situation, sir?
I think I'm gonna have to get some kind of soundtrack, like a background thunder and lightning and waves crashing on the shore soundtrack. Because right now everything's just pretty cold and slowly freezing right now. Although I did see a lobster boat go out, so as long as they can get out, they are gonna go grab those fresh and tasty lobsters. So
got to keep the lifeblood of Maine flowing. And before the pitchforks and the villagers with the torches come to get you, sir, let's move on out to St. Charles as well, where we are joined once again by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. To you as well, sir.
It's good to be here. Today's a good day, just because of the fact that with everything going on in the world, everything that happened in 2020, we got the option block, and that hasn't changed. So I'm excited to be here as always.
There you go. All right, with the gang all assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the heck is trading. And, if 2020 taught us anything, it is to take the conventional wisdom, the so-called conventional wisdom, when it comes to the market, and just throw it out the window. It's all madness. Past is no longer prologue. I've told the story many times when I first walked on the floor of the SIBO. I used to say, what's going on? What's driving? In that case, it was the SPX. What's driving the SPX up? And later on, out into Intel and other places, what's moving it up? What's driving it up? And all the old timers just laugh and say, more buyers than sellers, kid, or more sellers than buyers. I thought they were just cynical old bastards who had just grown cynical in light of the market. But in my years since then, I've come to align much more with that viewpoint. I think last year put an exclamation point on that analysis. All your old conventional wisdom, the market favors a conservative administration, doesn't like the more, shall we say, spendy Democratic administration. Market hates gridlock. Market abhors one-party domination. All these other things that were kind of conventional, just out the window. None of it matters. It's a day that ends in Y. We're going to probably rally. And I saw the mother of all rallies. Of course, the inauguration. Andrew, I'm sure we'll get to this in a little bit. We had some interesting things going on there as well. But, of course, it went off without a hitch. 25,000 troops will do that sort of thing. Will guarantee a little bit of stability. And so the market loved it yesterday. Huge rallies across the board. Pretty much every major index at or approaching new all-time highs. Today, taking a bit of a break from that. S&P literally unched coming into showtime. The Dow off slightly, not even 0.1%. NASDAQ, though, continuing the upside, up not quite 0.5%, about 0.4%. And all of our favorite volatility products kind of pretty much where we left them last week, which I'm sure Volman will have a thing or two to say about that. Come into showtime, VIX was at about 21.75, down about 0.5 point from last show. Not a heck of a lot. Remember, everyone was speculating, well, the inauguration, the will they, won't they, the terror of the 25,000 troops, that's what's keeping the front end of the VIX curve up. Nope. Just the day that ends in Y. We're still north of 20 in VIX land. VVIX at about a 114. So that's down a few points from last show, but nothing crazy. Good old VXX actually up a wee bit from last show, up to about 16.5. It's about 0.25 point increase from last show. So all of you who were leaning heavily on the fade post-inauguration, not so much for you. And Vol Q, a.k.a. the at-the-money Vol of the NASDAQ 100 at about 23.75. That puts it down a little over a point, about 1.25 points from last show. So all the vol, not really, kind of shrugging post inauguration. So since we're talking vol, let's start with Vol Man himself, aka the alter ego of the Rock Lobster, Mr. Rock Lobster. I got a feeling you might have a thing to say about this. Shall we say volatility shrugging of the shoulders, sir?
I do have a thing to say. It is shrugging his shoulders. So, as a trader, like .com boom and all that kind of stuff's kind of surviving that. I just think that somehow all this money that the government has spread around, somehow it's not going to small businesses, and I think it's going to millennials buying calls and stuff. And I've watched stocks go up for a very long time, for 30 years or something. I've given some numbers, like what was the Dow when I started? I'm trying to remember. Maybe 2,300. The Dow was 2,300. I remember the QQQ was like $17. 17, not okay, with no handle in front of it. $17 in 2002. You know, that was 18 years ago. So I know the markets go up. I totally get it, and I'm still long, you know, pretty good amount of stock. But I just think there's just a lot of dollars chasing, you know, it just feels small. The equity market feels really small right now. I don't know why that is. You know, maybe because sovereign governments are issuing just tons of debt for literally no interest, with no regard to how they're ever going to pay this back. We've been, you know, so whatever. It's been going on that for a while now. It started under Obama, continued under Trump, quite frankly. Although the first 2 years until 2018, you know, and we had 3% interest rates. And then the COVID-19 thing sort of blew the lid off of everything. So there's no end in sight. We have a new government that, you know, wants to spend more, but it's not like he's a whole lot worse than, you know, what we've had since probably 2002. So anyway, however that ends up, who the heck knows? All I know right now is that realized vol. If Don was here, he'd be shaking his head, right? But I know his doppelganger is here, and like you've got realized vol is still relatively low in SPX. We had a crazy rally yesterday just because somehow the U.S. managed to have an inauguration, I think, which is good. I don't think it was much of a surprise, though, that it was going to happen. But I think there was relief somehow. People start believing the press, I guess. But all of those things really doesn't matter. What we have, though, is we have a future that's around 25 as from the option pit indicator that we have from a little vol regression we do. The futures are just relatively expensive here, just to where VIX cash is. So, and then and the market's barely moving. You still have a 12 vol. Now it's not a 5 vol like it was 3 weeks ago, but still. And the only thing I can think of is there's just no one is selling options in like any sort of real way. Nobody is pounding the 3,800 puts. Nobody's pounding the 3,700 puts in the SPX. It's not happening. They are not pounding puts in the Qs. And can you blame them? I can't blame them. So I think that's part of the issue. The liquidity is mostly on the buy side. The volume is huge on the upside. Like all the skews and tons of stocks are skewed wildly north. Stuff like Bitcoin going up and up and up and up and up, right? All that stuff just fuels the bullish cycle. And, one of my favorite sayings is calls love a bull market, right? But as liquidity providers sell calls, they have to buy the underlying, that gets them a little more front spread, and vol starts to grow. And, and that whole complex, the vol just starts to rise. And until somebody starts selling some juice, I think we're going to have this level. And this is, I think, part of the problem why we've just maintained this 20 VIX for so long. So even though you have sort of the veneer of stability, 1 day difference, right? But I think that's the problem. And I've had a lot of vol puts just go to die. I even thought we'd probably see like a 19 this week, and that was my vol idea, maybe 1975 or something like that for vol views. And the realized is there to make it happen, but we're just not seeing it quite yet. So until we see real sellers of vol, I just don't think VIX is coming down, and these futures are going to just melt ever so slowly. And if the futures melt slowly, VXX, UVXY, SPXY, all those products, although those SPXY is going to move the opposite direction, just very, very slow. And I think that's what we got. So the action is still in, all these goofball EV equities that are just blowing up all over the place. And And vol, for the most part, we'll see. I guess the jury's out if people decide to start selling some options. Just haven't seen it yet. Again, that the term structure going out very flat, 26 vol to July. So, and I think the second part is that the rollout of the vaccines, everybody thought was going to be a little, kind of slow things down. At least I did. They're rolling out, but I don't know if they're really doing anything or we're getting any success. So, anyway, just a lot of cross currents. Nobody's selling options, and you add all that up, and that's the mix. Although the last time we saw the premiums start to skyrocket, remember in September, Mark, right before like the SoftBank whale came in or whatever.
I do recall that period. Yes, sir.
Premiums are like they are jacked, right? And I think that was another thing. There's just no sellers, so it's like we didn't know who the Sith Lord buying the juice was back then, and we don't know who the Lord is now, the Sith Lord buy. But they have yet, as I would say, yet to reveal themselves. But I have a feeling that, at some point here they will.
Yes, it was the SoftBank whale, at least for a while. Then it became the retail one-lot whale who was buying all this juice. And now I guess it's just everybody. The Sith Lord is us. We are all the Sith Lords. How many Jedi VIX puts are you going to send out to die to battle that Sith Lord, sir, before he reveals himself?
Today, I am done. I am done buying.
Oh, yeah. I don't know if you're done. I think we got some questions about the VIX puts for you a little bit later. So I don't think you're done quite yet, but let's go on. Let's take a break from the madness of Vol Man and Sith Lords. Let's go to the happy, tranquil land known as St. Charles. Uncle Mike, you had a heck of an Uncle Mike type of day yesterday. Today, taking a much-deserved, much-needed breath and a rest before you continue the rally, sir. So what is lighting up your tape today?
Never before in the history of the entire stock market has there ever been a better time to sell than right now. All-time highs again today, although looking at SPY, it's up by 14 pennies. And looking at SPX, it's up like 0.3%. So we're positive, but not by much. So nonetheless, we'll still take it. Still all-time highs. But overall, things lighting up my tape is that we had the inauguration and nothing bad happened. And that we did have a very peaceful transfer of power yesterday, which is a good thing, no matter what side of the aisle you're on. It's obviously what we want in America. So that was a good thing for sure. And it just appears that the market just really wanted to go up again yesterday. So it wasn't like a sudden news event that came out. If you just look at a daily chart, or I'm sorry, a 1 minute or a 3 minute chart of yesterday's market action, it was pretty much just a 45-degree angle going upward for the most part. And so on that, it just appears that the market seems to sense some stability and it's going higher. But ultimately, to go back to what you said, Mark, about the cynical old men on the trading floor, it is more buyers than sellers. It seems to not matter what a lot of the news is and what a lot of things are happening. But we have that. I mean, my take from this is that we have very good economies in the world overall. Now we have I'm not trying to say that things are great everywhere and we have worldwide prosperity. I'm not trying to say that, but we do have very efficient business structures throughout the world. And ultimately, when you do a stimulus bill, when you do all these billions and trillions of dollars that we're basically just printing and throwing away, it's ultimately going to make values of things go higher. Now, in the long run, whether it's that good or bad for our country or for our world economy, that's a debate for another show. But in the near term, when you're throwing trillions of dollars at something, it's hard for the value not to go up. And what we've been doing is we've thrown trillions of dollars, at least through the $600 checks, the $1,400 checks, and all the checks that Americans have been getting. We've been throwing a lot of money out there, and that's ultimately benefited the market from the standpoint that people who are out there getting the checks are using it to buy groceries, to buy this, that, or the other, but they're ultimately buying those things from big businesses. The big businesses are in the stock market, and hence the market goes higher. Now, is that going to be good for small businesses? Is it going to do different things on our economy of small businesses and local economies? Like I said, that's a debate for another show. But what I believe is undeniable is that when big businesses do better, stock markets are going to do better. And what big businesses are doing better? Well, let's take a look at Apple. Apple right now, it's up $4 on the day. It's up from 132 to 136, and that's no small move, even for Apple. Even for Apple, that's a move with which it can actually sink its teeth into. I mean, we've joked on the show before, oh, Apple's only up 1% on the day. It's like a down day for Apple. But no, Apple's up a fairly significant amount right now. With where it's going, and they don't have earnings again until I believe it's next week. So, but you can ask Mark Longo about that. But I do question the reliability of Mark Longo's Apple earnings announcements. But that's another story.
Oh, you already missed them. They were over the weekend, sir. A rare weekend announcement for Apple.
Oh, got it. For those of you that don't know what Mark's talking about, you can go back to episode, 200 or something like that, when Mark's trying to freak me out because I had large positions in Apple, and he told me that there was earnings announcements in the show notes, and kind of had me concerned for a little while. But then I realized that whenever Mark says anything about anything else, he's a very reliable source. But when it comes to Apple earnings, I don't trust the man as far as I can throw him. So we have that going on. And so now we're kind of in a period of what could be a lot of excitement in our economy, in that we have a new president in, we have a new Congress, a new Senate. But more importantly than that, for the excitement, is that if this vaccine does work and America goes back to work and we have our economy moving, I know, at least from my standpoint, that the day that I can walk into the local grocery store or the barber shop or whatever the case may be, and I don't have to wear a mask, and I'm not trying to get into the mask debate. I'm talking about when we're at that point to where we're not wearing masks anymore, whatever side of the fence you fall on the mask debate. I'm not trying to go there. But when we are at that point, I don't know about you guys, but I'm going to be very excited. And I believe a lot of Americans are going to be excited as well. And ultimately, an excited America means a more bullish investing America. And I think that's ultimately what is going to drive up our market. Now, is there going to be a time where we pull back and then we have a violent crash? Of course, it's happened throughout the entire stock market history. But in the meantime, right now, it appears that people are looking forward to that time, whenever it may be, whether it's 4 months from now or a year from now. And that's what I believe is really driving up this market, aside from the fact that there's more buyers than sellers. That's my take on it today.
I don't know. If masks go away, though, Mr. Uncle Mike, I just saw they announced a cool light-up mask at CES that has filters and fans, and it has voice amplifiers. So going back to the Rock Lobster's old Sith Lord, we could all sound like Darth Vader together. It'd be awesome walking around with these cool light-up Darth Vader masks.
Okay, that would be really cool.
So I might wear that post-pandemic just for the heck of it. A fashion statement, if nothing else. Keeping on the theme that at the end of the day, we are all truly the Sith Lords, each of us out there, buying up this market every day. Listeners, all right. We talked about realized vol a little bit earlier. Let's go back to that land. Let's go back out to the demand derivatives hot seat. Mr. Bob, sir, I know you guys are always crunching away at the numbers for all things realized vol. What's been coming across your tape of late? I know you got some interesting research you want to share with the folks, sir.
Yeah, thanks, Mark. We just finished a landmark study here using our real day options. Now, just give you a couple of sentences about them. We've talked about them. Real day options are delayed strike daily options. So you buy an option today, you say, oh, I want it to expire, let's say next Friday. You get the at the money today. You just don't know where at the money is until Thursday night at the close. That's when the strike gets set, and then it's good for 24 hours, and then it turns into a regular option, just like you know. But before that, it doesn't have a strike. And so these are very interesting options because they give you perfect close-to-close exposure. And as you know, many traders like to get the close. That's why there's so much volume, at the close. But everybody's, like an elephant or whatever, trying to get through the little keyhole, trying to be the last guy to get the close. And, only one guy can really do that. So, you try and get close to the close. But what's interesting about real day is you get exactly the close exposure. Your strike is at the close. If next Thursday, S&P settles at 37.27.12, you get the 37.27.12 call or put for Friday. So it struck right at the money, right to the penny. And if the arrow's green or the arrow's red, that's good for you, depending on which one you bought. So anyhow, what we did was we created some research going back as far as I could. So we had data back to 1950, so 70 years worth of data. And what we did was we tried to replicate what a covered call would be using real day options. So selling a daily option every day for the last 70 years on an S&P portfolio. So you own the S&P, you sell a call against it, and every day you get this call that hopefully expires worthless, right? So you get to collect the premium. If the market drops, then you collect the premium, and it kind of buffers any downward move in the stock. If the market goes up, then you just collect the premium, really. So we calculated all of that for 70 years, and the results were pretty outstanding, actually. I couldn't believe it. We double checked and triple checked these numbers just to make sure. But if you were to do that, so let's talk about the S&P. So just as a reference. So the S&P over the 70 years went up on average 10.1% per year. If you sold this covered call strategy every day for 70 years, that portfolio would have gone up 26.55% per year. And let's talk about how much money you'd have with that difference, because while it sounds great, 2.5 times your money, that sounds really great. But when you compound it over 70 years, it turns into something astronomical. So if you put $1 into the S&P 70 years ago, you'd have about $842 today. If you put $1 into this program, you'd have $14,400,000 just from that $1. It's 14 million times your money. That's the miracle of compounding and having such a huge return, kind of day in and day out. It just rather astounding. So the research is available. We put the chart out on the website. So all you have to do is go to demandderivatives.com and then scroll down to real day options, and you'll see our real day research, and you just click on that. You don't even have to register or anything. The chart will come right up. And let me just tell you, if you missed the last two shows, just above that is our weekly index ranking. So we mentioned, a couple shows ago about our realized volatility percentile ranking. How expensive options are, or how much risk there is lately in all of the markets, the top 40 markets. That's all there on the weekly index ranking button. Again, you don't have to register. You just click on that. You get the chart right up. And if you go all the way to the top, we have our crowdfunding button, and we also have a survey. We'd love you to take the survey. That really helps us, show traction, show that there's interest. And the more surveys we get, the easier it is for us to get funding, and the easier it is for us to get funding, then we, can compete with the current exchanges and provide these products to you. Right now, real day, real vol, none of them are trading. So you help us get going, and it's easy, just spend 5 or 10 minutes of your time completing a survey would really help us out.
There you go. I'm looking at this right now, Bob, looking at this chart. And if you want to just summarize it all in one chart, listeners, you can go over the real day, demand derivatives, click on the real day, see it for yourselves. We'll tweet this out as well, so you folks can check it out. But it is pretty staggering stuff. So you're saying, Bob, you found the one instrument, nay, the one strategy that has outperformed Bitcoin over the last 7 years, sir?
Yeah, really. It's pretty astounding. Now, just be careful. This is on a log scale. And so the drawdowns, they don't look so bad, but they are. They're pretty monster drawdowns here. So this strategy, while it does produce a long run, a really solid return in the long run, there are some monster drawdowns that you're going to experience if you were to just start this tomorrow kind of thing. But you can't start it tomorrow because it's not trading. But, as soon as we do, just be careful. You're going to have some big ass drawdowns. But I think in the long run, it'll be really worth it as long as you can keep playing.
Ooh, big ass drawdown. That's always terrifying for our audience, but interesting stuff. Check it out. Nonetheless, we got to keep rolling. But really quickly, let's break down what else is lighting up the tape out here. Pretty active day, all things considered, given the fact that most of the major indices are kind of shrugging it off, listeners. VIX doing about 250,000 contracts as of a few minutes ago. The ADV ticking up to about 470,000, so that's getting up there a little bit. SPY at about 2.2 million. The ADV 3.75 million. The S 585,000. The ADV about 1.15 million. The Qs already at 907,000. Their ADV is 938,000. So the Qs, the only index that's moving and the only major index that's trading a lot of paper right now, pretty much at its ADV already. The IWM at about 350,000 contracts. The ADV pretty much 2x that, 708,000. Let's break out the top 10, see what you crazies are out there trading. Pretty active day today. Cost you 285,000 contracts to break into the top 10, listeners. That gets you to Intel. My old stomping grounds out there. Number 9, AMD, still fighting away there in the top 10, 293,000. Number 8, GameStop, back in the top 10 at 315,000. Number 7, Facebook, 317,000. Number 6, another old school name coming back to the top 10. We're going to talk about this one a little bit more, I think. This is Zynga, putting up some numbers, 331,000. Remember, they were all the rage back in the day, back in the early days of the show, and our buddy Mr. Grigas over there at Options Express loved himself some Zynga calls, and we'd always laugh at him. Looking at some numbers now, 331,000. Number 5, Neo, 388,000. Number 4, good old Amazonian, 428,000. Number 3, Tesla, yes, only a paltry 440,000. Something has usurped Tesla. What could it be? You're not going to guess it, listeners. I was surprised. It's Ford. Ford blowing the doors off today. 1.67 million. Ford on fire. I think we're going to talk about that one again a little bit later, but we haven't seen these kind of numbers. I'm not sure if we've ever seen these kind of numbers out of Ford before, even on earnings day ×2. So this is some serious business afoot here in Ford. And it almost toppled Apple. Apple number 1 still, but just by a hair. It's 1.78 million. So Ford knocking off Tesla, almost bumping off Apple. You know something's afoot. Let's get to it. Let's head right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Let's do it. Let's unleash the Eye of Sauron, see what it brings back to us. A few of those names we just talked about going to make a recurrence. Mr. Rock Lobster, do you recall the primordial ooze days of the Option Block program when you were just popping on every now and then? And our buddy Mr. Grigas over there, he was loving himself some Zynga, and everyone was obsessed with all things mobile gaming. Do you call those days, sir?
I recall those days. Wasn't that that was the early days of social media, right? When all that stuff was all new and brand new and Web 2.0, and it was all spanking brand new down in 2008 or 2009 or something like that.
I don't think this show doesn't go back quite that far. The network does, but it goes back a pretty long ways. And this one was a few years after that, but you're right. Early days, certainly, of the mobile front for gaming and things like that. And Zynga was dominating the tape and making a lot of the popular games you folks love out there. Since then, they've gone through acquisitions and a bunch of other things. Trading right now, well, ticker symbol Zynga still, ZNGA, trading $10.50 So they've had quite the run. Let's see, a year ago they were trading, $6 and change, about $6.50. And then they rallied up to close to where they're at now, 1044, back on July 9th. So we talk all the time about June 8th. This one peaked on July 9th. By the way, they had an interesting period. They didn't really sell off that hard in the Great Nadir, like along with everything else. They went from about 7.25 down to 630. So not a huge sell-off. I guess everyone figured they needed some mobile gaming when they were stuck at home, because this stock pretty much rallied. Then after hitting that 10 and change again level on July 9th, it sold off again on September 11th. It hit 835. Then it kind of bounced back up again, peaked at, about almost $10, 987 on November 4th, then sold off again down to about 795. Then it kind of hovered again until recently, when it rallied from about 880 all the way up to nearly $10 again. And it's been threatening to break $10 pretty much ever since, and it finally did that today, rallying up to about $10.50 out there. So Zynga is back. Remember I said they're in our top 10 listeners, already putting up, 331,000 contracts. Well, a lot of it coming in this trade that our Eye of Sauron found today. Pretty big one of the bigger single name options trades out there today. Someone's really got an axe to grind with these Feb 11 calls going out on the 5th, listeners. So these are weeklies, 11 strikes, so not that far away now. Only about 50 odd cents or so right now. And let's see, they went up. We saw a huge block that caught our Eye of Sauron's eye, which was 14,445 of the Feb 11s going up for 38 cents right near the offer. But that wasn't it. Also saw nearly 4,000 going up a little bit earlier for about 50 cents. These were pretty much, again, same deal, right around the bid. The total of, as of we kicked off the show here, 45,000 of these have gone up, maybe more since then. So it's one of the more active contracts out there today in single name land. So if somebody's got an axe to grind on the Feb 11s, by the way, more than half of these going up, lifting the offer there. So it looks like someone's gobbling these bad boys up. Let's take a peek at the vol really quick. Yeah, because these other calls, the first lot, the big lot, went up at 952, and the implied vol was 59.6%. By the time that 4,000 lot went up, looks like about 20 minutes later, the vol was already up to 74.2%. So it seems like someone's got a bit of an axe to grind to buy these bad boys. By the way, there are earnings. They're on the 10th, so they're not today. You might be forgiven for thinking today was earnings day, given so much paper. Looking to see what's going on to drive this. I mean, they launched a Harry Potter game in South Korea. Well, I don't know. Is that enough to really cause this madness? Our friends at ORATS spotlighted this one as well. It is number one on their list of the highest options volume to 20-day moving average at about 3x. So their normal volume is at about 48,000 at the time they wrote this report up. So obviously a while ago, it was 144,000. They obviously have blown well past that now. So a lot of upside love here for Mr. Rock Lobster. This is kind of old school. This is kind of like going back to the early days of the show. Zynga call love. What say you about this freaking Feb 11 call palooza, sir?
It used to be very exciting. Do you remember those exciting Zynga days? And
I do. I remember mocking Mr. We gotta get Mr. Grigas back on the show so we can mock him again.
I know he's probably running, Options Express. I don't even know what is it now, Schwab. I don't know what the.
He is a big wig at Schwab now. Yes.
Yes, he's a big Schwab wheelie. So, and remember with Zynga when there was also action when they were going to do online gaming, right? When they were, taking online gaming bets and stuff like that.
Yeah, that was a big hope for them. Yeah.
Yeah, and Barstool Sports did it with Penn Gaming, and the stock. I guess it was like what? The stock was $5, and nobody thought anybody was going to gamble, and it was $5, and now it's $100. So Zynga, I think they kind of missed their opportunity. It's all I can say with that. So I don't think the stock has moved much in 7 or 8 years, to be honest. They do have a nice piece of property though in downtown San Francisco. They used to anyway. All I can say is just look at the volume on this. This is exactly the point I was making today. Like somebody's buying 51,000 calls in Zynga, right? Like, how's the vol going down? Like volatility is up 32. It doubled. Vol was 40%, and now it's 75. It's like, how the hell is VIX going down when all these calls are being bought. It's a little mind-boggling, I have to say. And so I think this is part of it. So, do they even look unreasonably priced, even at a 70 vol? The stock hasn't done very much. It's probably one of the few technology or social media or whatever mobile stocks that hasn't done a whole lot. But I mean, they're not paying attention for the calls. So what are you going to do? Say like buying, you got 3 weeks to go and the 11 calls for, not very much money or a bad purchase. So I think in this market, you blink and the stock is like $11.50, and all of a sudden those calls are worth $1. So it's kind of hard to slight that purchase, don't you think?
Yeah, we got to come back to this one. We'll be watching these just for old time's sake. By the way, our keen-eared producer saying that Zynga there's reports out there that Zynga is considering finance for a large acquisition. Not sure if that means they're going to acquire something else or perhaps be acquired. The rally would maybe make you think the latter, but that wording sounds like the former. Either way, it's enough to move some numbers out. We'll come back to these. These are not going away very long from now, only on the 5th. So we'll be back to these pretty soon to see how this palooza of Feb 11 calls works out. Let's move on to another one that's on I think you could technically call it another palooza. Knocking Tesla off the top, almost knocking Apple off the top of our top 10. Very few names can do that, listeners, but sleepy old Ford managed to do it to Tesla and almost to Apple today. Ford, if you've been paying attention to Ford for a while, it's been an interesting name to watch. Post the Great Recession and the recovery out there, Ford kind of languished. It got up to around had struggles really breaking past 9 or 10 with any great gusto or enthusiasm. In fact, even back when the stock was selling off not too long ago last year and was getting around the $4 to $5 range, folks were writing epic treatises about how it was still a value trap even at those levels. So Ford has always kind of languished at these levels. But, overall, the stock price is attractive, particularly a lot of those newcomers entering the market. But I know Mark has talked before about the Robinhood folks liking themselves some Ford. Well, everybody likes Ford today. This name has had quite the journey. Let's look at the journey of Ford over the past year. A year ago, it was trading $9.21, so kind of threatening that $10 range again, which it always had trouble breaking. And then in the great nadir, it got annihilated down to, let's see, what was the low? $3.96. I know they were threatening the 4 handle for a while. It looks like they broke it. And then they rallied up again to June 8th, $7.53, and then they sold off again, talking about the whole value trap argument. Sold off again to about $5.84 by July 9th. So it was still languishing around there. And it's kind of languished there for a lot of the year. By September 29th, still trading $6.60. It wasn't until really October it started trending up into the $7 range. By November, it hit $9.25 again. Then it gave a lot of that back up, down to $8.50 again by January 4th, even of this year. So starting off the year kind of weak, and then it just has been on the rocket to the moon since then, trading right now $11.64, up another 78 cents, or about 7.2% today. I know Kramer was talking about it. I think the folks at Deutsche Bank raised their price target from $9 to 11. Spoiler alert, we're north of that already, so they got to raise it again. So yeah, fascinating stuff afoot out here in Ford. And there's a sea of madness going on out there in Ford today, which is why it's managing to do so much paper. What did our Eye of Sauron find out there, listeners? Actually looks like it was the Feb 12 halves going up 6,500 times for 75 cents, right on the bid. This is my favorite part here. If you're seeing what vol this was trading, if you know anything about Ford, pretty sleepy name. You don't really command a lot of juice if you're writing a covered call, let's say. These traded almost a 68 vol. That's impressive for Ford. There are earnings coming up in the life cycle of these calls. They are on the 4th. So coming up in a few weeks out here. So Mr. Rock Lobster looks like someone, at least for our Eye of Sauron's concern here, decided to do a little bit of call overwriting out here to the tune of 6,500 of the Feb 12 halves or 75 cents. Kind of hard to fault them getting a 68 vol in Ford. By the way, if you're wondering, listeners, all this paper out there, what the biggest trade of the day is in Ford, the most active contract, it's the Jan 12s. They've gone up 102,000 times already today, listeners. So that's where, followed by the Feb 12s with 84,000. So those two, you got nearly 200,000 contracts out there in Ford land. So fascinating stuff. And Mr. Rock Lobster, what are your thoughts on this Ford explosion, A? And then B, on this, looks like someone trying to harvest a little bit of the old risk premium on the Feb 12 halves here, sir.
You know what I love about when we do the show, we do the op block? I can't help but dating myself when I was like a wet behind the years new trader. A huge day on the PCX. I can't help but remind the growth of the option business. But a huge day on the entire floor was 90,000 contracts.
Ford does that in one strike now, sir.
And Ford is doing it in one strike. So if you want to see how the business has changed and how much more retail is in the business and blah, 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 that tells everything you want to know. I actually put on a little Feb-Jan calendar in here for small dollars because, as you stated with the vol, the front month vol is so big prior to earnings that you could buy calendars for a flat vol. So you can buy the earnings month and sell the month, the term prior to, the weekly prior to, for about a flat vol, which usually to me is a decent trade. Of course, not a trade recommendation, just an observation. But yeah, I was watching this and I'm like, oh my gosh, like, so the calendars are dead cheap in there. So I figured out what the hell, you don't have to spend so much money, and you have a decent potential return. And this is what I'm still like, okay. So even after this huge run in GM, like GM is going to start doing some electronic driverless car stuff, and Ford, like, all of a sudden the assets of these businesses might be worth something, and let's just say this, it has not budged the Tesla monster at all. It is still an $846 stock. It's worth more than all the car makers combined by quite a bit, actually, I think. And it's not stopping. So, you would think if they're starting to buy Ford and starting to see the E potential for these car companies, that Tesla's going to actually have competition, because right now I think the pricing's like, well, they have no competition. But like, anyway, again, I'm not, we've had so much fun with Tesla over the years. And if you shorted it, you went broke. That's all I'm going to say with that. But I look at this and I think, yeah, some of these car makers might have, they might actually make some stuff and make some money for once. So we'll see what happens with all that. But I can't fault anybody for buying a jillion of the 12 calls. Why not?
This might be the greatest legacy of Tesla. It got Ford to break past the 10 handle with some gusto, with some conviction. People are like, oh, this is a cheap play on EVs. Let's go buy a bazillion Ford. That's fascinating. Just a few months ago, people were saying, oh, Ford at $5, that's a value trap, waste of money. And now here we are. The year that was 2020, moving into the year that was 2021. We got more block. We've got to keep on rolling. You guys have questions. Let's see if we can squeeze a few you in. It is Mail Block Thursday, after all. A little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, welcome to the Mail Block, the portion of the show where you guys take the reins. Let me just we start with a little bit of love really quickly, because it's a crazy year. But we got this comment here from Zeely KW. He says, total noob here. Huge fan, guys. Appreciate all your content. Very new to this, and with your help, I'm starting to grasp things better. I still have 1,000,001 questions, but I enjoy listening to the content, and I'll listen as much as I can before wasting time with questions. But had to let you guys know I appreciate it, and you guys are amazing. Left a 5-star review on the Play Store. Thanks, guys. And a bunch of exclamation points. Well, thank you, Zeely KW, and everyone else who takes the time to go out there and rate and review our stuff. He did it in the Play Store. Obviously, he's getting our app for Android. You can do it wherever you get our content, listeners. So all of you out there taking the time to do such things, we thank you. Just like you can be like Zeely KW as well. Find your store of choice wherever you get our content. Keep those comments coming. So new folks like Zeely here can continue. I don't think you're a noob, but it takes a while to learn this stuff. We get it. We're here for you. All right, next up, we got a long-time listener. Looks like he's listening live now. Mr. Luigi My boy Luigi says, this goes back to your VIX puts, Mr. Rock Lobster. He says, what would the lobster say to a YOLO position of June VIX puts? I'm looking at a long position. So a YOLO, aka you only live once, I assume that means he wants to bet the farm on June VIX puts, Mr. Rock Lobster, because you only live once.
Well, I know, and I'm so not hip to any of the lingo. And so on a YOLO put, probably like the 18s or 19s in June. I think they're not priced too bad. They're not going to move very much, and you probably won't have to buy. You probably won't have to waste your time buying them for quite a while, because I think the future is 26. So again, this is not investment advice. This is just, at some point we probably get back to a 13 handle. But remember, VIX trades on the future, not the cash. So it is a long incubation period. Very, very long. So you can see VIX at 12, and the future still could be at 20 in June without very much trouble if that happens. So just don't forget that's kind of what you got going there.
So YOLO, maybe watch out. We talked about before, the Rock Lobster has sent a lot of puts to die so far in VIX. Maybe you don't go YOLO crazy, bet the house, the kids' college fund. You could do some nibbles. That certainly makes a lot of sense. As long as maybe the bet in the farm you want to hold off, because folks that have been doing that bet recently, no bueno out there. All right, Mr. Bob, we got a question for you here. It looks like Econ Quant Vol. It's a long one. He's listening to the show. He saw your chart. He wants to know, how do you get options data from the 50s and 60s? If you missed that chart, listeners, we sent it out as well. It goes all the way back to 1950. So Mr. Econ Quant Vol wants to know, Bob, where are you getting that data from?
Cool. Yeah, what a great question. And this gets to actual empirical results rather than looking at options or looking at the implied volatility of options or whatever. So let me give you a simple example. Let's say that there were only 2 days of data, one where the market went up 1% and one where the market went down 1%. Okay. And you bought a real day call for those 2 days. You would, if you paid 50 cents for that option, you would break even, because one day you'd lose all your money and the other day you would double your money. And so over the 2 days, that option theoretically should have cost you 50 cents for there to be no advantage to the buyer or the seller. And it'd be the same thing for the put. So that's what we do. Based on 70 years worth of data, we look at every market move. It went up 1.13%. It went down 0.29%. It went up 0.54%, et cetera, every day. And we record whether the call went in the money or the put went in the money. How much did you make? And when you do that for 70 years, that number comes out to 0.345. What that means is and we're working in percentages, not in S&P points or whatever. This is 0.345%. So in other words, if you were to buy a daily option or a real day option, any kind of daily option, and you paid 0.345% of the option, so like basically 35 basis points. If you paid 35 basis points every day, you would break even. Now, there's some other research showing that options are generally too expensive. And how much? Well, that kind of varies, but roughly about 15%. So what we did was added 15% to that 0.345%, and that comes out to 0.362. And so then we said, okay, now what if we were able to sell a real day option, call option, or buy a real day put option at 0.362 every day for 70 years? And that's the result.
All right. Thank you for that, Mr. Bob. Unfortunately, though, we've been gassing on with all sorts of crazy stuff here today. Ford, Zynga, old school names, real vol, all kinds of fun stuff. Great questions. Keep them coming. Unfortunately, that music means we're kind of coming up against it. So we're going to go a combo around the block, as well as what you can get, what you can learn, what you can access more from our contributors. Let's start with the uncleest of Mikes, Mr. Uncle Mike, sir. I didn't get a chance to pick your brain on Ford. Are you stunned by this Ford move as well? I know you've been a Ford interested party, let's say, over the years. How does this move intrigue you? A, B, what are you keeping an eye on for the rest of this week until our next show on Monday? And then C, if folks are intrigued, they want to reach out to you, maybe about Ford or something else. Where should they go? What should they do, sir?
Well, full disclosure, I don't hold Ford right now, but it is interesting to watch from the standpoint that over the course of the last couple of weeks, it's gone from the roughly 840 to 1215. That's a pretty nice move. So in terms of my take on things, what I'm watching in the upcoming weeks and months and years, so to speak, is seeing if we can create another all-time high tomorrow. Markets always get a little, how do we put, interesting when we're at all-time highs. So continuing to watch that. From a news event, I think the big news right now is just seeing what's going to happen with the COVID vaccine, to see how it works, to see what our new president does. And then in terms of if you would like to learn more about myself or what I do, go to my website, stcharleswealth.com. Feel free to contact me, and you can work with a financial advisor who doesn't hate. In fact, he loves the option product.
There you go, stcharleswealth.com. And Mr. Bob, same question for you. What are you keeping an eye on from a realized vol perspective over the course of the coming weeks? And then if folks want to access your research, your data, your crowdfunding, your survey, where should they go? What should they do, sir?
I'm really interested in the S&P. I personally feel that the market is way overdone, but I also see this, big influx of money. So I just think that there's going to be a lot more volatility going forward. I kind of disagree with, I don't know, most of the, buy and hold or just status quo kind of thing that's out there. To find out about demand derivatives, just go to demandderivatives.com. We have crowdfunding, and we have this great special going on now. If you invest $105 in our equity, you get 6 months of free trading on our exchange. So that's our little thank you for helping us, gather a little bit of money. We don't need a hell of a lot, but, every little bit helps. And just go to as I said before, just right on the main page, you can go down to Real Day for the Real Day research we talked about. You can go up just a little bit on Real Vol and get the weekly rankings on 40 different assets. And and there's also a survey too. So we keep adding stuff. Just come to demandderivatives.com, and there's a lot of info there. I made one mistake though on my quote before when I was answering the question. So 0.345 is the actual theoretical value of a real day option. If you were to buy or sell it over 70 years, you would break even. And since options are overpriced, then we added 15%. That comes down to 0.397. So what we did was take that 0.397 and sold that option every day at 0.397. And then what happened? And that's the result. That chart is the result of selling an option 15% too high for every day for 70 years.
There you go. Check them out for yourselves. Listeners, as Bob said, $105. That's all it costs. Get a piece of the exchange. They support the show. Get out there. Get a piece of the demand derivatives, the real vol, while the getting is good before it moves on to the next rounds. And you guys are out of the loop. Demandderivatives.com is the place for the research. It's the place for the survey. You can give them your thoughts. And, of course, you can buy a piece over there while you're at it. Demandderivatives.com. And last but not least, you can't buy a piece of the Rock Lobster. Well, maybe you can. It's more of a private transaction. But if you want to learn more about all things options, Mr. Rock Lobster, where should they go? What should they do?
Go to optionpit.com. Take a look at all of our goodies, Trade Vol, VIX Edge, all sharp bets. Mark's been doing a great job running those products. So it's great. Anyway, come on in. The water's warm, and we've been doing this for almost 10 years. So something has to be right. There you go.
There you go. Optionpit.com. The place to go when you're not listening to shows like this. And on behalf of the Rock Lobster and Bob and our good buddy Don over there at Demand Derivatives and Uncle Mike and indeed myself, I thank all of you out there for downloading, streaming, for subscribing, for taking time like Zeely, KW, and everybody else out there to rate and review our content on all the various platforms. If you need a little more in your ear holes, don't worry. We got you covered. We're going to pump some fun stuff in there about Superfly Spy flies, or SPX flies, actually. We'll be back in a little less than half an hour now, 25 minutes, to talk all things futures options, Bitcoin moving, ags, who knows what the hell is lighting it up this week. Let's go find out together on TWIFO in about half an hour, and then we'll be back again tomorrow, of course, noon Central, for volatility views. Then it all kicks off again next week, all the way through to Thursday in another episode of the Option Block.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.